Despite the heightened political activity experienced in Kenya last week, the NIC 20 share index still maintained a two-year high of 4,700 basis points. Joining me in studio to discuss this and much more is Samuel Gichohi, Head of Business Development at NIC Securities. Gichohi, many thanks for joining us.
Thank you for having me.
So what do you make of this, 4,700 basis points despite the elections?
Well, obviously the interest continues to be very high. We have now realized that politics does not seem to really affect the market as it did in the past, and I think that is because we are looking at a new constitutional dispensation which shifts power away from the center. We have a very strong outlook. The IMF is looking at a GDP growth in 2013 of something like 6%, I believe. And so all these factors, and the fact that as a frontier market, Kenya's market is the only entry into our region, and therefore we are still seeing a lot of entry of funds into our market, as well as, of course, a high level of liquidity on our market, which, in as much as to an extent I would blame it on the recent political issues. I can imagine how much the governors and all these new elective posts, with 6 elective posts, you know, on the ballot, you can imagine how much was actually how much money was being spread around.
True. Of course, now we know we're moving into the county government. But of course, of key interest is actually the foreign investor participation. Last week, 75% of the NIC activity was actually from the foreign investors. Then again, this week after the elections, we have the local investors coming in. What do you make of this?
Well, I think the foreign investor, if you looked at the volumes were much lower last week, which means locals, their attention had shifted off the market. So they were looking more towards what was happening on the election. I'm sure you spent a few sleepless nights as well. So that said, the foreign investor continues to see Kenya, especially with the new oil finds. We have all these new, county governments coming up. There's so much development potential in the country that they feel that they can make much more in terms of returns than, say, for example, Europe, where they still have the crisis. It hasn't really, washed over. I think the US and the European markets are not where you would want to be looking for, high returns. I think that means Africa, that leaves Africa. Asia has sort of slowed down, and so Africa is the place to be, and everybody wants to bet on Africa now. So I think with the new institutions, that we are seeing a lot of confidence in the fact that Africa has come of age. We are beginning to see that governance structures are beginning to now affect our business environment, and that is a very good thing for any businessman out there or any investor out there who's looking for somewhere to place their funds.
And of course, of particular interest is actually the peace element to this, and of course the dollar holding steady at 85 shillings, largely attributed to the peace that we maintained during the elections.
Well, I think so. I mean, that was a very high level of maturity. Kenyans have learned from what happened in 2007. The leaders, ensured that they came out very strongly to make sure that Kenyans did not go back where we were. And I think that we have a very strong judiciary now, and we can see that one of the presidential candidates has gone to the courts rather than go for mass action, which we saw last time. And I think this maturity tends to bring in business. It brings in confidence. It brings in a feeling of security, because nobody is going to take their funds where there is no security. But that said, in the past we have fought. But we haven't really messed up our economic systems. And so somebody might have been thinking, okay, I can bet on this heightened risk level to get higher returns. So you might be also seeing a level of speculation out there, where somebody says, look, I know whatever happens, Kenya will go back and we're going to start seeing economic growth once the elections are over, whether it's peaceful or whether there is issues. And I want to bet on that, because everybody will probably be running, because everybody was expecting the market to correct, which it did not.
Which we're happy actually maintained a high.
We're happy that it maintained a high, well, to an extent, because we also wanted to cash in on the correction, but it never happened.
All right. Let's look at some of the stocks that perhaps we expect to perform well. Scan Group, of course, coming in at 70 shillings per share, and of course, Nation Media Group 276 shillings per share. Now, because of the ad spending increases, especially during the election, perhaps we expected a bullish return on this stocks.
Well, I think Nation Media will gain more on this end, considering the fact that more of the ad spend in newspapers and all that, whereas Scan Group is more corporate centric in terms of their type of investment or advertising spend, and so, but they will still gain in the in that corporates have continued to make double-digit profit growth, which means that there'll be quite a bit of ad spend as well on that end. But I think in terms of the elections, I think the person to watch it would be Nation Media, who definitely got a lot of ad spend.
Fantastic. Lastly, Gichohi, we're looking at, of course, now going forward, economic outlook for this year under the new presidency, and of course, inflationary figures at 4.38%. What would be your outlook for the year ahead?
Well, I think there's a lot of challenges, but those challenges, I believe, can be overcome. I think the fact that now we have shifted from the center of power being the president, rather than he'll just be there to guide, and to sort of be the central, guiding force in what they intend to do. But unlike what we have had in the last 5 years, if you look at the spread of how the Senate and the county governments, etc., there's a clear majority, which means policy and legislation will be easier to pass, rather than where we have been having all these issues with not being consulted, etc. So I think that is a strength in itself, because then it's easy to push the agenda for the winning team. On top of that, when we come to the counties, then we can expect a sort of competitive nature to start coming out. Kenyans want to see the counties begin to pay off. So we can expect to see capital markets gaining from that, infrastructure bonds, county bonds, hopefully. I think municipal bonds failed, but now I think it's time for county bonds to come in, and it's a very important time, because they need to create that credibility where investors now can invest in both government bonds but also county bonds, which would be another new investment arena.